I think you probably kick off there, Claire, if you want to go ahead.
Yeah, that's great. And to look at people are still joining, that's fine.
Yeah,
Ross, are you ready to go?
yeah, good to go.
Great. Okay, so hi everybody. Good evening. My name is Claire Hanrahan. I'm the Managing Director here at Irish Pensions and Finance. You're very welcome. It's the first of our spring webinar series. So tonight we're going to be talking all things mortgages and house purchasing. Before I introduce to the speakers and set out the agenda for the evening, just want to go through a little bit of housekeeping. The webinar is going to be approximately 40 minutes long. We're going to have the chat function turned off during the presentation itself, but a lot of the people who are attending this evening have submitted questions. So what we're going to do is we're going to answer them as we go through the various slides. And look, if we have a little bit of time at the end, we will open the chat function for questions. Once the webinar is done tomorrow, the marketing team, they're going to send you out. They've done a really good brochure on everything that you're going to learn here this evening, and also the contact details of the speakers. Now, there is a prize. So we have a draw for €100, one for all voucher. So what we're going to do is at the end of the webinar, we're going to ask a question on a piece of information that we give you during the actual presentation. So we'll open up the chat function, and the first person with the correct answer will win the €100 all for one or one for all voucher, whatever they're called. So yeah, so pay attention and take notes. Just to say thanks very much to Sarah Connolly, who's our marketing manager. She's helped arrange this evening and she's producing us for us. So we'll always be lost without Sarah. Can't get anything done without you. So just, I suppose, look, as I said, I've introduced myself. I want to welcome Ross Gaynor. So Ross is our mortgage manager here at Irish Pensions and Finance. He is a qualified financial advisor. He's a professional banker. He's with us since 2022. And he's 7 years as, with mortgage and banking experience. Bit of a fun fact, Ross, before he came into financial services, was a professional footballer. So who did you play for, Ross? You played for...
Millwall, and then a host of League of Ireland clubs then, so Dundalk and Cork City.
Yeah, so like a life before finance. So that's Ross. And just, I suppose, look, when we were setting up the agenda for the evening, we thought it would be great to get somebody in who's got some great experience as an estate agent. So we want to say thanks very much to Ryan Carroll for joining us. He's from Leinster Property Consultants. He's over 20 years experience in the property sector. And we just felt that, Ryan can answer some questions for the people on this evening that will really add value to the presentation. Because it's not just about getting the mortgage, it's about buying the property as well. Okay, so we'll move on to the next slide. So just, I suppose, a lot of you will be familiar with who we are. So Irish Pensions and Finance, we are an independent Irish-owned brokers. We're based out here in Clonee in County Meath. We are in business over 30 years, actually 30 years last year, and we've over 25,000 clients. We typically specialise in financial advice to public servants, but we also do with private sector employees as well. Mainly we run ABC schemes for the public sector, but we had such demand from our customers saying, can you help me with my mortgage journey, that we established our mortgage department back in 2021. So look, I think, we can say we think we do a great job, but I think it's well worth having a look at our score on Trustpilot, and there's some really good feedback from customers who've dealt with us and we've helped with the mortgage journey. So that's there for you to have a look at. Great. So agenda. I suppose the first thing we're going to look at, and Ross is going to talk to us about, is why choose a mortgage broker. There's so many things coming at you on the radio and online and stuff. So we're going to explain to you what the difference between going with a mortgage broker and the bank directly. And then we're going to talk about mortgage types and the documents required. So all the bits and pieces there. And then Ryan's going to help with us with tips for going sale agreed. We're going to talk about rules, fees, your mortgage journey, the do's and don'ts, and then our prize draw. Okay, so look, I've obviously had a good look at the agenda for this evening, and there is some really good content here, and a lot of stuff that when I was buying my first home, I would have loved to have. So, Ross, do you want to start us off? So, like, people are on here this evening, they might have been, I don't know, with a bank since they were 4 years of age. So why, when they're going to get the biggest purchase of their life, should they choose a mortgage broker?
Having previously worked for one of the major retail banks, I've seen both sides on how staff would interact with clients. And there's four main reasons that I've come up with on why choosing a broker is more beneficial than going with a retail bank and how we can make the difference for our clients. Firstly, it's access. So at IPF, we are a mortgage broker. We've access to all lenders, and some are only available through the broker network. Okay, that's a big thing. Okay, because that has options that typically, like if you are with one, say, bank all your life, the first choice would be going in and see what they can offer you. Just to let everyone know, there is so many options out there. Okay. Secondly, definitely one that I felt is the personal touch. And this is so important because you have a direct link with your financial advisor via mobile or email. Typically with retail banks, you might have to go through their call centers. You could be talking to a robot, or you might even have to go into the local branch itself, which can be miles away. You might be living in a town that's miles away from your local branch.
And you have to take time off work, Ross, and do that. And,
exactly. And rushing on your lunch and stuff, driving a half hour to go ask a silly question that could be answered in 30 seconds, This can be so frustrating because throughout the whole mortgage process, clients do need reassuring because they might think something is a massive issue where it's really not. And a 2-minute conversation with us on the phone will calm that situation down. So that's the reason why we provide everyone with our mobile numbers and our emails, so we can help in any way.
Yeah. Okay.
Thirdly is the market. As I said, we've access and we'll compare all the lenders to ensure that one, you have the best rate available. But secondly, is there incentives there? Some lenders might suit you, some lenders might not. You might want to reduce your term if you're switching across, or you might be interested in cashback. Some lenders do have different rules. I will tell you a quick story. We had a client last year, she won't mind me mentioning her name and route. She was declined with 2 banks. Her own bank that she was with for 15 years, she was declined to do a repayment capacity. She joined in on one of our groups. I had a quick conversation with her. We went to Haven, which is a subsidiary of AIB. She was accepted. She got her keys into a brand new house before Christmas. A no with one lender does not mean a no with them all. So again, if you've been declined previously, get a second opinion. See what we can do for you, because there is lenders there that have different rules and criteria.
Okay, that's great.
Lastly is a big one. It's for life. So you're not just going to have one mortgage, and you're possibly not just going to have one house throughout your lifetime. You will potentially switch, or you might want to trade up or trade down. Okay. We review your mortgage every 2 years to ensure that you're actually on the best rate available. Again, we're also specialists in your life cover, your savings, investments, and your pension. So it's really, it's a no-brainer to choose a broker over a retail bank. I'll go through some mortgage types now, guys. Okay.
Okay, brilliant. So the first thing, it's first-time buyers, Ross, which is a lot of our attendees this evening, I think.
Yeah, the majority are first-time buyers, guys. And one of the questions we get asked all the time is, when should you speak to a mortgage advisor? Because there's a lot of information out there. Again, it might be the incorrect information. So we always recommend a minimum of 6 months before you're even thinking of applying. Again, if you're thinking of applying, you might Google, what do I need to be doing? That mightn't be the right information. We can go through all of that with you. You might feel like you're doing the right thing. You might need to improve on certain things, which we can point out for you. The main reason for applications being declined is down to repayment capacity. I'll touch on that at a later slide as well. The good thing for first-time buyers, Claire, is that Central Bank increased the limits on how much you can potentially borrow. Okay, this came in last year. It was 3.5 times. It's now 4 times your combined gross salary. So if you are on, say, 45 grand per annum and your partner is on 35 per annum, as my example shows there, you can apply for, it's not guaranteed, but you can apply for 75k times 4, which is 300,000. That's your loan amount. You will need your 10% deposit, okay? Which means if you find the property for 300,000, you will need a deposit of 30 grand up front. This can be through your own savings, the Help to Buy, and also gift elements. If you're not using the Help to Buy, your deposit must have a minimum of 5% of your own savings. If you're just using the Help to Buy, that could be the whole 10%, okay? But if it's not, you have to have a minimum and show a minimum of 5% from your own savings. As I touched on the Help to Buy, there is schemes available. You got the Help to Buy and the First Home Scheme, guys, okay? These can help you with your deposit, but they must be new builds or if you're building. Help to Buy can give you up to 30 grand if you're buying or building a new home. The First Home Scheme is a little bit different. This can give you a maximum of 30% of the cost of your new home. Now, it's a bit technical, but again, it must be a newly built or if you're building. But the big difference in this one is, guys, if you're currently renting or residing in a property, okay, and you've received a notice of termination from your landlord, as like the landlord's putting that property on the market.
Which is happening an awful lot at the minute, Ross, isn't it?
It is, especially in Dublin, it's happening quite a lot. You can apply for the First Home Scheme to help you bridge that gap with your deposit. Now,
I think Ross, that one good thing is that we have some information on the brochures, and that you can, if people want to speak to you afterwards, we can talk to them about it more in detail, I suppose.
Exactly. Yeah. The handbook that you're going to be getting, guys, is an excellent tool. It's going to go recap on what we're kind of going through now, but it has a lot more detail in it as well. And again, if there's questions and you're reading through it and you're unsure, that's why I'm here for you. You can give me a quick call, or if we're doing the pre-questionnaires at the end, you can fill them in with your questions and we can go from there. Okay. One of the other things, guys, I want to chat is cashback. Okay, this is an incentive for clients. Now, some lenders, as I said, will offer lower rates, okay? But some lenders will offer you cashback. In one particular, Permanent TSB will offer you 2% cashback on the loan amount, okay? And also 2% on the monthly repayments. This means if you have a mortgage of 300 grand, you will receive 6 grand within 40 days of drawing down. And you do not have to pay that back. Okay, that's a big one. We've asked before, do we have to pay that back? No, you'll get your 6 grand within 40 days. Another one is
that's a great help when you're, trying to furnish the place and all that,
If you're tight on your deposit and you're putting every single penny into your deposit, it's a great incentive, Claire. It really is. And another one is they will give you 2% on the monthly repayments if the direct debit is coming from a PTSB account. So potentially, if your mortgage is €1,000 per month, you'll actually get €20 cash back, which will pay for your mortgage protection or your house insurance or anything like that. Rates are as low as 3.65, guys, okay? And a big one now we're kind of starting to see is clients looking to split their mortgage, okay, between a variable and a fixed. So you can actually fix part of your mortgage, and if you're looking to clear the other part off a little bit sooner, you can leave that on a variable, okay?
Okay.
It's a good tool to have. Now, green rates are available as well, but you must have a BER rating of B3. Typical new builds will be between A1 and A3, so they're guaranteed for a green rate. But as Ryan will kind of touch on later on about improving BER ratings, it's definitely worthwhile to do it.
Okay. So, okay, Ross, that's a lot of stuff there, okay? Yeah. Now, we looked at the questions that the attendees have sent in, and a lot of them on this call are from the public sector. So, and they're on a pay grade and there's different scales. What can you do for them?
Perfect. We specialize in providing public sector mortgages, Claire. And as I can say, is we can move up 2 points up the scale, and that's with Haven, who is a subsidiary of AIB. So we're definitely one of the specialists when it comes to public sector mortgages. Once we can provide proof that the scale is there, and that's it. You can go two points up that scale and you can get more. Brilliant.
Talk to us about credit rating. What does that mean, and what explain that in layman terms?
This is done by the lender at application stage, and being honest, this is probably one of the most frustrating parts of my job if this isn't disclosed up front. If you are worried about previous historic credit histories, or you might have missed a payment or anything like that, disclose that up front when we're having our initial conversation, because the lender will run that at the application stage. And again, if you are worried, we can preempt you to get a credit history report before you actually do your application.
Okay. So you want to know everything at the start for us, basically.
Yeah, up front, because you're wasting not only airtime, you're wasting your own time. And if there's something that we can do to prevent that, it's definitely worthwhile doing it.
Great. And I think you're going to, at the end, go through your do's and don'ts anyway for getting mortgage ready.
Yeah.
And then you kind of mentioned fixed versus variable. What's the best option for people now at the minute?
Yeah, we're seeing a lot more variable options being taken out, and that is typically because the variable rate is quite low at the moment. You're looking at between 3.75 and 4% with the bigger banks, okay? Now, the problem with variable rates is, Claire, you can draw down your mortgage and one day later, the bank can decide to raise that variable interest rate up. Your only option will be either to stick with that increased variable or choose one of their fixed rates for existing clients, not the new business, which is lower. The existing business rates are typically higher. So again, it is a risk, but if you're looking to possibly pay a mortgage off a lot earlier, and that's why you want to go on a variable, we have lenders like Avant who will allow you to pay 10% of an overpayment every year. So that's why we can go through all of that in the consultation with the clients.
Very good. Okay, I think, as I said, they were a couple of the questions that we had on the first-time buyer side. So we're going to have a look at second-time buyers, Ross.
Yeah, there's not as much information on this one. Second-time buyers can still only borrow 3.5 times their combined salary, but the big change for them since last year is now they only need 10% deposit, as it was previously 20% deposit. And 20% deposit of a trade or up a house can be quite massive, okay?
Yeah.
If you have your 10% saved already, this gives you another option of possibly keeping your existing property as a buy-to-let. Now, depending on affordability, of course, we would assess all of that in the consultation, but it is another option. And some clients don't realize they actually have that option until they start talking to us, you know. So it's definitely worth having that conversation because rent is so high at the moment. If you can keep your existing house as a rental, it definitely can be beneficial for you in the long run.
Okay.
Cashback is exactly the same, Claire. So it's 2%, and that for second-time buyers as well. You know, so we go through all of that as well.
Brilliant. So I think I have a couple of questions here. So say, for instance, we had a couple of the attendees who have property in a different European country. So what's their status in, you know, if they buy in Ireland?
This is the same for the UK, America, anywhere. Once you have had a mortgage before, you are classed as a second-time buyer in Ireland. That's it. Right. Now, unless you've inherited the house or you've paid for it fully in cash, okay, you would still be classed as a first-time buyer. Or if you're separated or divorced or you file for bankruptcy, you would be classed as first-time buyer. So there is a few ways you could still be classed as first-time buyer, but again, we'd need to know all the details on the situation.
Grand. And yeah, there was some questions about people who were married, but you know, they were separating and second-time buyer situation there.
Yeah, look, the timing has to be really good on this one because again, if you have an apartment and you're looking to use the equity from that sale to complete the new purchase, it has to be done around the same time where you're handing the keys over and you're getting your new keys, because you could be staying with family for weeks or months if you sell your house before you get your keys for your new property. So again, this is why we have Ryan on the call. He'll touch on it later on. It's so important for timing to do it right. Because I have seen cases before where deals have fallen through because one didn't go sale agreed or there was issues with vendors and stuff. So it has to be all down to timing.
Okay. So I think we do have a brief slide on switching.
Yeah, look, this wasn't really a switching kind of webinar, but there was quite a large amount of questions coming in for switching. So I have added this slide. And again, it's such a hot topic at the moment. Why would you switch? What would entice you to switch across to another lender? Because there's, like, if you Google it, there's so much work to be done. There's really not, okay? There's lower interest rates available across the market. Any rate above 4% is worth exploring. Definitely worth exploring your options because you can get lower rates on the market, but there is other incentives. And Avant in particular are very good. They're offering a one mortgage, which has a very competitive rate between 3.85 to 4%. And you can fix your mortgage for the rest of its term. So if you have 15 years left in your term, Claire, with Avant, you can fix it for 15 years. You have that security for the next 15 years. And that might entice the likes of a tracker client who is on a tracker mortgage, who is very unsure whether their repayment is going to go up next month. This gives you that certainty that this is going to be my mortgage payment for the rest of that mortgage journey.
Yeah. Okay.
It's a big one. Again, potentially switching, you can refinance any large loans into that switch. If you have a home improvement loan, it can be amalgamated into that switch, dependent on your equity position, of course. Again, if you're thinking of building an extension or improving your home or doing anything got to do with improving BER ratings or attic conversions or anything like that, you can actually release equity in your home to borrow the extra funds, as my example is shown there. So house is valued at 400 grand, your mortgage is 200 grand, you have equity of 200 grand there. You can borrow up to 80% of that loan to value, okay?
Okay.
Again, look, if you were to take out a typical home improvement loan with your credit unions or whoever, you're looking at between 7.5 and 8%. You can switch across, it's madness. You can switch across and release equity, and that whole loan will be at 3.65%. And we had clients, and we talked about it before, Claire, saved hundreds per month last year for clients simply by switching and releasing equity to do up extensions.
Yeah.
It's definitely the way to go. When we review our clients' mortgages every 2 years, one of the questions that we do ask is your mortgage term in line with your retirement age? Okay, are you looking to retire at 60, 65, or are you going to, some mortgages, would you believe, are going up to the age of 70? And a lot of our clients won't be working up until the age of 70. Very little.
Yeah.
You know, so again, is it worth switching across and reducing your term? Of course it is. Not only will you save tens of hundreds, like you will, but you'll actually retire and you will not have a massive mortgage repayment, and you don't want that.
Yeah. Okay. It's good financial planning.
Exactly. And there's cash back available all switchers as well. So you get your £2,000 cash back with Haven and Avant. And then if you're switching to permanent TSB, you get your 2%, and that is including the release of equity as well.
Yeah, I know my own mortgage is the fixed term is finishing up now. So for me, I'll be looking at, can I reduce down my monthly outgoings or can I reduce the term? You know, that's for me the goal.
And the time to do that, Claire, is to speak to us 6 months before that fix is actually finishing, because your average, as I said, look, your average mortgage switcher can take between 1 and 4 months usually, you know, so you don't want to be going on to whatever lender's variable that is there. So it's definitely worth getting yourself ready for that switch, because you can then pull the trigger whenever you want to do it.
Great. Okay, thanks. I think that's everything on switches. Ross, we were going to talk about actually, right, you know, I want to do a mortgage, be it first time buyer, second time buyer, switcher. What documents do I need?
Very simple, guys. Okay, so there's 6 months current account statements, and that is including Revolut and N26. Okay, you will need 6 months savings account statements, your salary cert, which is completed by your employer's HR, 3 of your most recent pay slips. It's between 2 and 3 of your most recent pay slips, but I like to get 3. Your EDS, which is formerly your P60, so we would need that for 2023. This is actually then loadable on the Revenue website, and your passport, driving license, and your proof of address. Typically, we can use one of your bank statements as your proof of address, but definitely your passport or your driving license is what we need.
Great. Okay. So I think, Ryan, we're going to bring you in now.
Thank you very much, Claire. So
yeah, you're going to talk to us about how we go sale agreed.
Yeah, so I'll assume at this stage that everybody kind of is mortgage approved or knows where their source of funds is coming from. At this stage, it's fundamental that you link in with your current estate agent, whether it's in your locality or you're planning to move somewhere else. You can also look on My Home or DAF to find your house. So I suppose once you find your house and you organise a viewing with your estate agents, it's important to be as prepared as possible. You know, look up the local area, look up the age of the houses. Do you know anyone else who lives there? But once you get your viewing in the house, it's always best to do that during the day to get a good, you know, look at the house, you know, definitely to see it during the day. Have loads of questions prepared. You know, what is the level of interest in the property? Are there any other current offers on the property? How long has it been on the market? Is there any defects? You know, it's also very important to know what the BER of the house. Has the house been extended before? Is there any certificates that's required, you know, to make the sale go through? So these are all the questions that you should kind of be familiar with before you go out to a house. Of course, the questions that you have for a new house and in an older house will be different. So it's worthwhile having your questions prepared and all that before you go out to a house.
Okay, so that's good advice.
Once you know you go you go to a house, from an estate agent's point of view, we would normally value a house a little below what we expected it's going to go for. And for that reason is to get people in the door, let them to have a look around, hopefully fall in love with the place, but also to see things in the house that they may have not seen in the pictures. They may have not seen the smaller rooms or anything like that. So expect in general that houses will go past their asking price. When you find a house that you really like, you know, do not make an offer that is too low below what the vendor is looking for. You know, once we kind of have an idea, and the seller will have an idea of the price that they're looking for. So never go too low below what they're asking, because we'll have an idea of the minimum. Again, that being said, never place an offer too high either above the asking price. You know, always try and find out if there is other people, you know, bidding on the house, how many people have viewed the house. Sometimes there may be an open viewing, so you'll get an idea of the people that's there. So never place an offer too high above what the asking price, but be fair. You know, all offers will be formally brought to the vendor. So once we get an offer on a house, whether that's 300,000, we are legally obliged to bring that to the owner. Some vendors may accept even a lower offer than what is actually the asking price. This could be for many different reasons as well. It may be that they may know somebody who's bidding on the house. The person who's buying the house may be mortgage approved, you know, has LinkedIn, has all the paperwork ready, and they may accept a lower offer as opposed to somebody who is maybe selling another house or waiting for a loan to be approved. So it's very important.
It's going to be quicker. Is that what you're saying, Ryan?
Yeah, it makes it a lot quicker. You know, have your mortgage approved. You know, have proof of funds. You know, bring that to your viewing, so you really know, the estate agent knows then that this person is really serious and has the funds, you know, available. Some estate agents, especially in Dublin and all that, may not actually do any viewings unless they actually see that you're mortgage approved. So it's very important to get that, you know, in place before you go out and look at any house. You know, offers then to an estate agent, they can be given over the phone, they can be made in writing, they can be given formal offer, and again, you know, you can also call into your estate agent. Like, all offers then, you know, before we go sale agreed, will always be in writing.
Okay.
And again, you should look for an acceptance from your estate agent that that offer has been, you know, received. Very
good. Okay, so I had some questions in for you, Ryan, all right?
Yep.
So everyone, like, how do you avoid bidding more? What you know, what's your opinion there?
When you're buying a new house and a new development, very rarely will there ever be bidding wars. The price is as stated. So with new houses, you should never really enter into a bidding war. With existing houses now, depending on the number of people that's looking to view it, it is likely that you will end up in a bidding war. Listen to your estate agent. You know, he will guide you in terms of what the asking price is and where we kind of see the house going. And that's where I go back to my last point. Never go too low and never go too high. You know, always try and work with the estate agent and kind of take their feedback. You know, I would say to somebody sometime, you know, if we get 300,000 on this property, I can go sale agreed. Some people may come in at a lower price, but end up missing out because they were going too low, where if they had just went a bit closer to 300,000, they may have avoided that. But it is very hard at the moment to not go into a bidding war due to the number of people looking to buy houses.
Okay, well, so take the advice of the estate agent is really...
Take the advice, yeah. The guide price will normally be generally in the area of what the price is. You can also go onto the property price register and actually look and see what other houses have sold for in the area. So that's a good idea of giving you an inkling of what the expected value will be.
Right. I suppose then, we were talking just a few minutes ago about the second-time buyers. So I say I have a house that I want to sell and I want to buy another house. What's the kind of chain I should do there?
For any estate agent to accept an offer, we need to see proof of funds, whether that's through mortgage, personal savings, loan, or whether they're selling a house. We need to see proof of funds before we can accept an offer and bring it to the seller. So if you're selling a house, my advice would be to get your own house on the market first.
Okay.
At least have a few viewings so that you're able to kind of see that there is a lot of people interested. If you make an offer on one of my properties, I would probably ring the estate agent of who's selling your property, just to see what the interest is and see if there's any offers on it. But if you're not, mortgage approved or have the cash available, unfortunately, an estate agent can't take your offer.
Okay. And then look, we were talking about BER ratings, okay? And obviously new builds, they're pretty good. Is there anything people can do with older houses to improve their BER rating?
Well, a BER assessment is basically an assessment of how the house actually functions and how the house is heated, how the house is able to retain heat and power and being able to save you money in the long run. So a BER rating can go anywhere from a G to an A. So that's a good indication when you're buying a house of what the energy efficiency and what the running costs of your house will be. So an A-rated house will fundamentally nearly have solar panels, air-to-water heating system, which is a lot lower to run monthly than, let's say, an oil boiler that's been in the house since 1980. So the BER rating is a great indicator of the cost of your bills per month.
Okay, great. Okay, so do we want to have a look at the mortgage journey? I know, Ryan, we're going to bring you back in on a few things around fees in a few minutes.
Yep.
So
I think one of the things there, Ryan, is just to build that relationship with your estate agent, because if you have that relationship, then you can trust your estate agent a lot more than just ringing up a random estate agent. That's right, isn't it?
Yeah, a lot of people would buy in the local area and have that relationship. But yeah, it's definitely very important to come in, call into the estate agent, ask them what houses are coming up, organising viewings, that everybody's on time, getting good communication. And look, the estate agent is there to help both parties, because especially in a small town or, community, people know each other. So, it's very important to keep that communication, open and, linking in with the person and finding out how your offer is going and how the viewings are going. And the estate agent will provide you with that information.
Yeah, exactly. Look, I'll briefly talk to you guys about a typical mortgage journey. Okay, so initially, look, you make your free appointment with us. Okay, we will complete an application and do a recommendation on your behalf to a lender that you choose. So we will give you all the options and you decide with our guidance which kind of path you want to go down. We then get the approval in principle back. Now, this can take between 3 and 5 working days. Some lenders are a little bit longer. You could be waiting possibly a week to 10 days, but typically at the moment, it's quite good. It's 3 to 5 working days for the approval, but it's valid for 6 months. Okay. And we get a lot of questions on, what happens after 6 months? Do we have to reapply all again? No, we get your most recent pay slips and your last 6 months bank accounts, and then we go for the extension. Once nothing has changed drastically in your situation, you will be fine getting your extension. Now, the big one is, as I said, you've already built up this relationship with your estate agent. You've found a property, you found that home, okay? We then have to go organize a valuation for you using one of the valuers on that lender's panel. So you don't need to go and get your own valuation done. We have to get that done with you using one of the guys on our panels, okay? That is important, guys, because we have in the past clients spending money on getting a valuation done when they didn't need it because we had to get another one done, so you don't want to duplicate it either. So it's about having that conversation with ourselves to make sure that you're not doing that.
Okay, we're going to talk about that fee in a minute, what the cost is.
Exactly. Okay, so the big one, and this is the one that locks in your rate because our market has been changing every couple of months recently. Your loan offer will lock your rate in, okay? And that is done after the valuation is returned, a property review has happened. The lender will then engage with your solicitor, okay? They will issue your loan offer to your solicitor. Then you have the completion stage, which is the best part of it for us, is we actually finalize the protection for you. We'll go with our partners and get the perfect deal for you. Your solicitor will arrange a drawdown date and he will request the funds. Now, the big difference here is that your solicitor will then complete the purchase and will arrange a time for you to pick up your keys. Clients think it's us. It's actually not. It's your solicitor that finalizes the sale or the purchase, okay? As I said previously, the typical mortgage, once a property is found, is between 1 and 3 months, and that is including switching as well, okay? If you don't have a property, it might take you a bit of time. We see them going between 6 and 12 months nearly. But again, if there is a property there, you're looking at 3 months from doing your property review to finish it.
Okay, that's great. Now let's look at under the bonnet. What
There
what
is
you
a
have to
couple,
pay.
yeah. There's a couple of fees, but they're not terrible. Like a valuation fee, okay. So these can range between.
So this goes the okay. So Ross, you've gotten me a mortgage with TSB. So this is from their panel that you were just saying that.
Exactly. I will send you a link, and then you choose a valuer on that panel, one that's obviously close to that property that you're purchasing. With Permanent TSB, it'll cost you €150 that you will have to pay. With Avant and Haven, you're looking at probably 180, depending. Okay, so again, that's the typical charge for that. It shouldn't be much higher. It won't be much higher than that. Legal fees, these range between 1,800 and 2,500, excluding stamp duty. So it really does depend on the solicitor. I have heard stories of solicitor fees up in €4,000, which is crazy. So again, ask your friends, your family who've purchased houses before. Do you know a solicitor? We know a couple of solicitors as well that I can recommend. Again, it's about shopping around. Quick question there, Ryan. What have you seen kind of in the market around solicitors? I know you deal with them yourself as well.
Yeah, I've seen recently now in the last couple of months that prices of solicitors have increased, and $4,000, Ross, I have seen some people being charged 4,000. This is especially the case if you're buying a large property, especially if it's a one-off site, there's septic tanks and different boundaries and all that. Sometimes that can take a little bit longer than, let's say, a house in a housing estate.
Yeah.
Fair enough.
And again, if there's other loans being amalgamated into the deal and they have to write to the banks, it can be a little bit more. But typically, lowest I've kind of seen is around 1,800 mark. It shouldn't be, depending on the size of the house, obviously more than $2,500.
Yeah, and again, that's something that your estate agent will be able to recommend as well, because we would be quite familiar, working with solicitors in our area. So
yeah,
it's definitely to get the advice of your estate agent too.
Now, stamp duty is for purchasing only, so that's 1%. That's under €1,000,000 for purchase price. If it's over €1,000,000, you're looking at 2%, but typically it's 1% of the property value. Okay, that's a big one. So again, stamp duty is 1% of that property value. Okay,
and that doesn't matter, Ross. Sorry, if it's first time, second time.
Yeah, first time, second time buyers, anything like that, it's 1%. The only one that doesn't have to pay stamp duty is if you're switching your mortgage. That's the only one.
So you don't have to. Okay.
Yeah, again, this is when I want to bring yourself in, Ryan, because you would be an expert here. So I know when I was buying my own house, it wasn't mandatory for me to get a structural survey done, but I got one done anyway because it was recommended me to do it. So would you get much of these in?
Yeah, we would do a good lot of these every week, Ross. We would charge a standard price of about 400 plus VAT for a survey. However, when you're buying a property off 300,000, it is a small fee to kind of have that peace of mind. A structural survey or a pre-purchase survey, as some people might call them, it really provides you a peace of mind that you're buying a house that has been built to the current regulations and also to comply with planning permission. So a building surveyor, architect, structural engineer can carry these out for you. Normally they will look at boundaries, they will, look at all the structure of the property, the heating structure, the heating of the property. They will also look at the BER as well. So they're not just there to actually highlight the defects and things that's wrong with the house. They can also advise you on, again, increasing your BER to maybe get to the B3 rating so that you can get avail of the green mortgage and all that. So again, a lot of recommendations. If you buy in a house that was built in 1970, it's worthwhile getting that because the regulations back then was a lot less than what they are now. So a good structural engineer, building surveyor will be able to kind of specify things that should be done to your house. And again, getting that advice really helps you with your life cycle of the house and trying to keep your bills down.
Yeah, it's the biggest purchase of your life, so like do your due diligence, as they say, and
It is, because when you go to look at a house, sometimes you can look at the size of the rooms and the kitchen and the bathrooms and all that, and you forget about the attic. You forget about the drainage, you forget about the little cracks in the walls, or how the heating system is operating. Is there any dry rot, wet rot? So there is a few things that it is really worthwhile getting. And it gives you that peace of mind being able to buy the house.
Okay, it's good advice.
Banks won't require you unless the property is over 100 years old, or if you get your valuation done by one of the guys on their panel and something comes up on that valuation. Now, the valuer won't go around with a fine comb and go through everything like what a structural survey would, but if there is something noticeable on that valuation, the lender may require you to do a structural survey then. Okay, but again, it's not mandatory. It's just something that I would highly recommend because I did it myself.
Yeah, me too.
There is other costs, guys. You have your mortgage protection and your house insurance. Again, we will talk you through the whole process of that during the consultation. And again, the good thing with us, every single step of the way, you have us to kind of discuss potential providers. We will do all that for you. Again, we're with you for every single step.
Great. Okay. So the next one is.
This is the one I give out to everybody, Claire.
Yeah, this is Ross's favorite one. He's going to tell you what you can do and can't do with your money over the next 6 months.
Yeah, sorry guys, but look, there is some here I'm going to say please on, and again, the reason why I'm saying these is because the worst conversation I can have with a client is a decline, and some of these are like, you won't realize some small things that you might be doing or you might not be doing can have a massive implication on your application. So the first one, pay all your bills on time. So lenders will allow you typically 3 missed direct debits within a calendar year. If they see a pattern where you're missing your car loan or you're missing your energy bill or anything like that, that's a red flag for them, because that could be the mortgage repayment, you see. So,
and can I ask Ross, is that going back to, remember we spoke about credit rating?
That typically, unless it's a missed loan payment, that won't show up on your credit.
Oh, okay, but when they're going through your bank accounts, that's what they're, you know. This
is it. So when I'm going through your bank accounts and I've noticed that you've had 2 missed, say, return direct debits, say there wasn't enough money in for your electricity coming out or whatever, the bank may request another 6 months to get a full year's current account statements to see what. So potentially, if you were hiding something before the 6 months, that might be flagged then. So it's so important to, if you are saving, and that's going on to my next kind of point, if you're saving, set a budget which will enable you to save, which isn't going to leave you short. Okay. Save a regular amount each month. Like we like to see a regular amount. Okay. And then if you have something left over, yeah, you can top that up at the end of the month, but set a regular standing order for €500 or whatever, and have that separate. Okay, don't be
just good behavior, basically.
It's good behavior again, and this is a small one. Like, we do see certain clients that might have a €15,000 credit card and a 20 grand overdraft. You don't need them. We will have to use that as a full commitment, Claire, because the bank will take the view of, okay, we'll give you a mortgage of 500 grand, but you can go and spend 15 grand on your credit card and then 20 grand on your overdraft the next day, which will leave you in debt. You know, so if you have these large,
so kind of it reduces your capacity to borrow, doesn't it?
Exactly. So like, again, it's not necessity, but we would highly recommend, if you do have large credit cards or overdraft, just reduce them to what you need them for. Like, I don't think people will spend 15 grand on a credit card in one purchase. Again, reduce to what you need.
Okay.
They don't, and this is a big one. So please don't dip in and out of this. There's absolutely no point in saving €1,000 per month and then walking down and taking 800 out the next day. Like, we can't use that.
Yeah. Don't
get new credit. Like, fair enough, small loan or whatever, and we have to disclose that to the lender, that's fine. But like, I don't want to be the one telling you, listen, you're going to have to bring that brand new Ferrari back to the garage. Like, I don't want to be that person. But again, if you're in an application and you have a massive new expenditure going out of your accounts, your affordability might be affected, you know, for closing off your mortgage. So again, don't do it.
Okay.
You can, this is a kind of a spot. You can change jobs once it's in line with the same kind of job that you have. So we do have guys that might change job in the council or change job in the healthcare profession. That's fine. Like, we can get past probation in them situations, but trust me, don't go and decide after getting your approval that you want to become a pilot or a skydiving instructor or something mad, because not only will that affect your application, but you'll have to pass probation, which is going to stall your application another 6 months, you know.
Right.
And it's not guaranteed that the lender will actually approve your application in 6 months. So don't change jobs. Gambling is one that, like, it's not the end of the world if there's small amounts of gambling in your account, but if you're betting massive money each week and it's outside your limits, you know, the bank's not going to look good on that. It's not going to look good in your accounts. And a big one is like we've had people try and hide stuff on Revolut and N26. So like, trust me, I'll find it and the bank will find it and it can affect it. So if you are gambling or you're doing that, instead of setting money to Paddy Power or wherever, take the cash out and walk down to the bookies yourself. It's just a recommendation because, again, I've seen applications fall because there's large amounts of gambling on accounts. So again, it's just something to look at.
Now, that's really good advice. Okay, now Sarah, before we have the kind of the prize, but I have some other questions that came in for Ross and possibly Ryan. So the loan to value, like, how does that work? And if, say, the property requires a significant amount of repair work, does that affect the amount I can draw down?
It can. So loan to value is the loan amount compared to the purchase price. So again, look, if since it's a very small purchase price of 100 grand, okay, you must have a minimum of 90%, which is 90 grand. So your loan will be 90,000 euro and the purchase price will be 100 grand. Okay, so that's how loan to value typically works. If a property does require work, there's two different ways we can go about it. It can be treated as a type of self-build application, but again, most of our lenders will do a type where they call a holdback. Again, they will give you the money for the purchase price, but they will pay you the rest for the works once the works is completed.
Oh, gotcha. Okay, yeah.
You know, so again, if say the purchase price was 300,000 and you need an extra 50 grand to do up the house, the bank will release the 300,000 for the purchase of the property, and then they'll hold back the 50 grand until we get a final valuation to show that the works are done. And then they'll release then the 50 grand after that, if that makes sense. Okay.
And as I said, look, you know, we're given kind of tidbits of the information here, but you'll get into more detail with people, Ross, on this.
It's case by case there with them. It is really case by case.
Yeah. Okay. We've a good lot of people, I suppose, and we're seeing trends of, you know, people who went to Australia for the few years and they're moving back home, you know, with permanent contracts. What's the story with those people getting mortgages, Ross?
I've recently done one, a healthcare profession coming back from Australia, had their contracts in place with their new employer, exactly the same role. They got their mortgage approval, but as a condition of the loan offer, they must have a pay slip from the new employment. So it is doable. Again, look, if it's the same line of work, probation can be waived, but it's case by case with lenders. So it's definitely something, again, you don't want to wait until you come back because you might miss out on your house. If you have that opportunity to get the approval in place before you come back, it's definitely worth having a chat with us because we will go to all the lenders to see if it fits what they're looking for.
Okay. Just we have someone there's a married couple here, right? But one of them isn't working due to kind of a childcare issue. Do they still have to make a joint application, Ross?
Yes. Once you're married, it's a joint application. Simple.
Regardless, yeah.
Unless it's an investment property. If you're buying a buy-to-let, it can be in one name even if you're married. But if you are married and you're buying a private residential house for yourselves, then it's a joint application. There's no way around it. Okay.
Now, there's a lot of talk around, you know, the rent-to-room scheme, like you might take a student and you can earn this money tax-free. I think it's up to 14,000 euros a year.
Yeah.
Will it, like, say if I'm going to buy a house and think, right, I'll take a student in or whatever, will the lender allow that, or what happens here?
A lot of people think this would be a positive, and including actually myself, before we did go with an application, and it's actually seen as a negative. They will take that rental income off your repayment capacity because it's helping towards paying for your mortgage, essentially. So again, they will not take that as a positive now. And we can't use rental income unless it's coming from a rental property. So rent a room, we can't include as income.
Okay. Okay, well, it's good. It's good for your people who are planning here this evening. Yeah. We have a lot of staff kind of up around the border counties who might get paid in sterling.
Yeah, we do have a lender, Haven, they're a subsidiary of AIB. They will use a foreign currency as income. Again, there's a few more documents required for that, but it is definitely something that we can look at. Okay. Now, I'm sure there might be people here who watched Dermot Bannon on Room to Improve, right? So what's the story with this kind of
property that's been vacant for 2 years, you know, what can people do? Or I've
Probably
heard a lot of talk about this.
myself and Ryan could probably answer this. You've got the vacant refurbishment grant is there, right? Its property must be vacant for about 2 years or more. The property must be built before 2008. You must own the property. This is a big one. You must own the property, or you're in the process of buying it. Okay, grants is up to 50,000 euro, if it's vacant. Ryan, if you had to add, I know there's something on derelict that you kind of know.
Yeah, we would do a lot of grant applications now for that, Ross. We've seen a high number of people looking for, you know, derelict properties and all that, and to see it as a good investment. So yeah, you must be tax compliant. Number one, you must own the property. You also need to provide a quote for the remedial works of the house. You also need then to get an engineer to sign off that the house, or an estate agent, or, you know, a politician, to confirm that the house was vacant for over 2 years. This can also be done by providing ESB bills for the house. So that's your way of providing the 2 years that it has been vacant. You can also get a top up of another 20,000 if the property is deemed derelict. So in that instance, you would have to hire a structural engineer or building surveyor to be able to deem the house derelict. So you'd be looking at dry rot, maybe no roof, no windows. You know, the house is really unlivable. And then you can get the top up. So we actually put through an application there the other day, or where we had to fill out the application. You put in all your costings, expected costings for the property. You submit it to the county council. Within 2 weeks, an engineer should come out to meet you. They will go through the property as well. And I think it took us on average about 3 weeks then just to get acceptance. So once the renovation has been done, you need to keep a copy of all the invoices, you know, and kind of a picture documentation of the process. And then you'll be able to avail of the grant once that all has been completed. The work has been completed, signed up by an engineer, and the contractor paid.
Okay. Now, I'm conscious that we're kind of a little bit over time. So I'm going to just take a couple of questions that came in, you know, live here on the chat, and then we might do our quiz. But as I said, if we don't get to the questions that people are asking, we will deal with them afterwards, Ross and Ryan. So, new houses, do they need a structural survey? But we're saying structural surveys are optional, correct?
Yeah, so a pre-purchase structural survey is normally required on a second-hand property, one that has been built previously and there's no kind of background history of the construction of the house. New properties will always be signed off by a structural engineer that works for the contractor. All new houses are registered with Home Bond, so you're automatically, you know, warranted by Home Bond.
Okay.
So most people would get a snag list, which is more of a visual survey of the property. You know, is there any cracked tiles? Has the windows been cleaned?
Yes.
Has the skirting boards been painted? It's more of a visual.
Okay.
Once you get that done, and the average price for them is about €250, they can be done by anybody. And then they are given to the contractor to kind of make sure all that work has been done before you should sign your contract in your solicitor.
Okay. Somebody asked the credit rating, how far back does that go? Or, you know?
Once it's linked to your PPS number, it can go back. We're looking at beyond 5 years, really. Do you know what I mean? So again, if you are worried about credit history, it's definitely worth running a credit report on yourself.
Yeah. Then I suppose there was asked, what stage should you request your structural survey? So at what stage in the cycle?
Some people will get a structural survey after they go and view the house and they like the house, and they might get a structural survey done before they put in an offer. My advice would normally be wait after you make an offer and it has been accepted, because you could pay for a structural survey of €400 and not actually agree a price to buy the house. You might miss out on the house. So you fundamentally, you know, paid €400 and you don't have the house. So I would normally say, go and agree a price for the house, submit your deposit, and then organize a structural survey.
Okay.
Because your booking deposit is 100% refundable, and all estate agents have to refund that back within 5 working days. So if something comes up in your structural survey that you're not happy with or is a major concern, you can always get back your deposit.
Okay. Look, there's a few other questions which are quite specialised, which I think we're going to just do the quiz, and we'll talk about next steps, and then we'll close off there, I think.
Great. Yeah, that's perfect, Claire. Yeah. So yeah, on to my favorite part of the evening. So look, we have a very simple question here. We're going to do fastest finger first person in the chat box with the right answer. And we'll have a nice €100 one for all voucher. So question is, what is the current rate of stamp duty? So if you were listening in, and we'll see very quickly who's been listening and taking notes.
Okay.
And I can see loads of answers coming in already. Let's see who was first in. So I think it's Siobhan O'Mara. So well done, Siobhan. We'll get your voucher out in the post to you. So thanks a million for everyone putting in your entries. A lot of correct answers there. So everyone was obviously
everyone was on the ball listening. Great. So Sarah, just I suppose, what's the next steps for?
Yeah, perfect. So basically tomorrow, Claire, everyone who's been in attendance here tonight, we're going to send an email out tomorrow morning to everybody. And what you'll get in the email is a link basically where you can book in to have a conversation with Ross. So if you have any questions at that stage, if you're ready to start your application process, you can book in an appointment with Ross. We also, as Claire mentioned earlier, we have a first-time buyer's handbook that we've done up for you. So that'll go into a bit more detail about some of the information that you've heard here this evening. It's something you can refer back to. And then we'll also have a recording of the webinar tonight. So if you want to watch back any parts of it, you're more than welcome to. So also there, if you wanted to book in now, you can just scan the code there on your phone, using the camera on your phone, and it'll bring you straight to the link.
And then I suppose we have the contact details. And Ryan, thanks very much for your time and expertise. It was a good insight, from an estate agent.
Yeah, no, thanks very much. Really enjoyed it. As you said, my contact details are there. So if anyone needs any advice on structural surveys or, anything regarding our property, feel free to give me a shout.
Great. And thanks very much, Ross. And good luck to everybody on the call. I hope you get the house that's meant for you.
That's great. Thanks a million, guys.
Thank you very much.
Thanks very much, guys.
Have a nice night.
Have a nice evening. Bye.
Bye-bye.